Hey guys, welcome back to my YouTube channel. My name is Alexander Nikitin. I am a professional trader and a programmer as well. And today I want to talk about three most common mistakes in trading advanced pattern formations. As I'm specializing in this particular strategy, I will talk about this. Not the three most common mistakes in trading, but the three most common mistakes in trading advanced pattern formations. So, if you are a pattern trader, feel free to grab your coffee, a pencil, and maybe some paper, make some notes. This video will be a bit large, so use your control plays buttons, play pause buttons, to skip some maybe boring minutes of this video, but overall it will be very useful. It will change your trading, advanced pattern trading on the higher level. Okay, so let's go. Many of you guys think that the most important feature in advanced pattern formation is the correct ratio. Yes, it is true it is true at first glance, but it is not as important as you might think. Okay, so of course you need to know the advanced pattern ratios, because without it you won't be able to identify the perfect advanced pattern. So that's why you need to go to my website, www.pssoftware.net, learn the patterns, and you will have the descriptions of every pattern. All those ratios are described here step by step: criteria number 1, criteria number 2, and criteria number 3. Okay, once you have identified your pattern, here the trade management starts, and this is the most important thing in this trading. Okay, if you simply identified your pattern and you have predicted your entry level, you have placed your stop loss, and you have calculated your 382 target. Yes, let me draw it this way. Your 382 target this way, and then you sit back and relax. Stops in place, targets in place, limit orders in place. You will most likely have less than 49% accuracy trading it this way, because what you need to know what is a rule for invalidated pattern. You need to know what is the missed train, and you need to know what is the target adjustment. If you know all these three things, many pattern traders don't know about these three things. That's why I called this video 3 most common mistakes. If you don't know these three things, then you will be trading negatively. 48 to 50% accurate advanced pattern formation. Well, I had 51 trading them. 52 was my best, maybe trading them set and forget method. But if you manage them according to these 3 rules that I want to give you right now, then the accuracy of advanced pattern formation turns from random 50% to 66 to 70%. I had godless on Aussie Yen 66. I had bets on Aussie Yen 1 hour 64. I had ciphers on Aussie Canada 4 hour 77. So these numbers are indeed a very good edge for you to generate money. Okay, so first of all, you should know what invalidates your pattern. Many advanced pattern traders doesn't know this. Okay, suppose you had this movement, you had this movement, and you had this movement. So your pattern can be already drawn. Yes, you have X, A, B, and C points, the 4 points, and the 5th point is D point is projected or predicted. So what invalidates your pattern? if price goes below C, will this invalidate pattern? No, this won't invalidate the pattern. You can stretch it this way. If price goes below A, will this invalidate the pattern? Yes, this will invalidate the pattern. So you are to delete that because C point cannot be lower than A point. Okay, hope you understood this. What else invalidates the pattern? If price goes above D and then it goes below C, will this invalidate the pattern? Yes, it will invalidate the pattern. In this case, you cannot stretch your C point this way because the B point is the highest point between A and C, and if you stretch your B point to the higher point, you will have a different pattern. It is a godly pattern already because the B point is different. So you should remember the pattern is invalidated when the C point goes lower than A point. In case of godly pattern, when the C point touches 886 of A, XA, and when it goes below C after it violated B. Hope you understood that. Write it down, and you shouldn't trade the pattern even if it goes to completion point or whatever. So you shouldn't trade this pattern. Okay, what is next? What is next? The next thing I call a missed train. Let me show you what it means. We first need to measure the last wing of the of this triangle. Why do I call them wings? Because it is a butterfly looking pattern. So this is the first wing and this is the second wing. So I measure the second wing, and I am to put let's say 10%, maybe 0.1, 10% level. Okay, so why do I need this? Sometimes we have the price going the CD leg, yes, going to complete our D point, but then it retraces and goes here. So the second rule says if the CD leg is completed more than 90%, yes, and then it turns back and hits the target, you shouldn't enter at the second test. Should not enter, because in this case price usually does this. This is the missed train. So the reaction of this pattern already played. Those institutional traders already took their profits. So and even if your limit order didn't trigger, you shouldn't re-enter. So there is no reason for entry anymore. So this is the second rule: no entry if the target was hit after 90% of that. So that's why I put that 10% line from C to D, 10% retracement. This means the area that should be hit. If the CD leg is completed 90% and then it returns, goes back to what is that? 382 target or 618? The first target, yes. So you shouldn't trade that afterwards. Okay, next, number 3. The first one, you should have strict rules for invalidating the pattern. The second one, you should have strict rules of what should be considered a completed pattern. So if CD leg is 90% completed, so the whole pattern is completed. And the third rule is target adjustment. What means target adjustment? Many people doesn't do this, but this is very important. Sometimes price goes past D and then it goes here, reverses. So and then it goes this way, for example. Yes, so what is the target adjustment? Your initial target calculates from D, but if price goes higher, you ought to restretch your fibs to the highest point, and what you see, your target placement should be adjusted to 382. So in this case it was a winner. But if you didn't adjust this, it would be a loser. You see? A winner, a loser. This is a very crucial point in trading advanced pattern formations. Okay, you may say, well, if you stretch that targets higher and higher and higher according to price action, your target level becomes less and less and less, and your risk to reward, on average risk to reward, becomes less. Yes, it will become less. It will become negative. Your targets will be negative, and your losers, your targets will be smaller and your losers will be larger if you trade percent money management. This is mistake number 4. Let me say mistake number 4. Don't trade percent money management because of target adjustment. Let's say you trade only 1% in every particular situation. Yes, so you placed your stop loss of 10 pips and your take profit of 10 pips. So whatever it hits, you either lose 1% or you win 1%. Yes, let's say 1-to-1. But what happens if you consistently make your targets smaller because of that price action? Sometimes you generate 0.7, sometimes you generate 0.8, sometimes you generate 0.5, 0.3% of your risk. So you consistently make it a bit losing. Your risk to reward turns into negative. But if you use if you don't use fixed fractional money management strategies, it will be different. So you can lose a pattern of 10 pips stop loss, yes, and then you can win a pattern with I don't know, 100 pip target. You can easily do that. So in case of fixed fractional percentage, you will lose 1% and then you will win 1%. But in case of pips based strategy, fixed lot size, let me call it this way, you will have different patterns every time. So even if you lose some small pattern, it hits stop loss, the next pattern may be larger, and even if the target is adjusted, the target will be larger because the pattern is larger than the previous pattern. So, and on average you still have positive risk to reward, and this is what was proven by backtesting, by real-time trading. On average you have a positive profit factor. What is a profit factor? When you divide all your winners divide by all your losers, and this is the profit factor. Okay, so these 3 mistakes. Nobody cares about what invalidates the pattern. This is mistake number 1. Second mistake, nobody has the rules about the completion of CD leg. Just put in limit orders and wait until price goes there, but sometimes it reacts earlier. So this is the second mistake. The third mistake, nobody adjusts the targets. This is the third mistake. And mistake number 4, that most of traders are trading percent strategies, money management strategies. That is very, very mistaken in advanced pattern trading, because you adjust your targets, you move your stops to break even, you do trade managements. That's why your percentage winning and losing trades can shift, risk to reward can shift from positive into negative. Okay, so now that's not all, guys. Now let's go into a real-time environment. I will show you something really important. Let me go to my MetaTrader. You can see the chart in front of your eyes. What is that? Aussie yen. If I go home to the beginning of that chart, you will see the starting date of 2000. So we have 2017 today, so we have 17 years of data downloaded. I just deleted that with my script that I have created. Okay, so what I'm going to show you, I am going to show you the backtesting process of Cipher patterns on 1 hour. So I don't want to test Godleys and bats because I already did that, but I want to test ciphers. Okay, to do that, I will launch my Pattern Search Pro. I want to test large swings. It is very convenient. Large, small, medium, large swings. I want to display the history mode, and I should disable everything but ciphers. Okay, and in a second you see it appears. Lots of patterns are drawn. Well, let us start then. Maybe I will go fast, but I will explain those rules in real environment, and I will also calculate the statistics in front of your eyes right now. So let us start then. Take some notes, grab your coffee, sit back and relax. Okay, nothing here. We didn't have the completion of CD. Nothing here, so we didn't have the completion of CD. Here it is, violated B and then violated C. So it is nothing here. If I go very fast, just pause the video and play it back again. A winner. Let me type it in. Yes, done. I have a pencil and a paper by my side. A winner, obviously. Another winner. Nothing here. A pattern wasn't completed. Okay, let me zoom it a bit in. Obviously, a winner. Let's go next. What is this? Here is that situation. When we have our pattern, we have to stretch the fibs from C leg to D leg. Oh, didn't touch that, ready to. Initial target is this green arrow, and we didn't have it. Let's go deeper. We crossed the stop, so this was a loser. Not every pattern is a winner. You are to be ready for some losers. Hope you understood what I did. I stretched the fib and I checked if that was a trade that hit targets. Okay, lower than the stop loss. Made us nervous a bit, but that was overall a winner. Let's go next. Okay, didn't trigger at all. Didn't trigger. Pause the video if I am going fast. Stretching fibs. Not here, but here it turned into a winner. Okay, let's go next. What was it? I wouldn't trade this because of C point invalidation, so just stay away. Okay, zoom it in. Look at price action. It went here to complete the C point or the D point, and then it turned to the downside to take your target. A winner. Going next. Okay, here is that situation. If I stretch the fibs, it didn't meet my 10% rule, so it is not a missed train. So stretching to see this, stretching to see this, nothing, stretching to see this, nothing. So it was a loser, because next it crossed the stop loss level. Typing in. Okay, here it is. What was it? Boom. You see it hit the 90% level, yes, and then it reacted, hitting that first target. So stay away from this. It is a missed train. Didn't re-enter. Didn't re-enter. Okay, next one. It was lower. Didn't hit the entry and went to the target. So you see, and after that it went to the stop loss. So I didn't enter that on the second touch. So I didn't have a loser here. If I stay away, I don't have any losers. Nothing. Obviously, you see it is lower. The 90% of CD wasn't completed. So next is here, and then it went here, and this was a winner. So you ought to trade it exactly the same way you are doing the backtesting. Obviously a winner here. Exactly this way you are to write down your rules. What invalidates your pattern? What is the missed train? What is the target adjustment? What is break even the stop? These are the rules for trade management. Okay, you can see it didn't trigger and went to the upside, spiking that, hitting the first target, so I do not enter, and I missed this winner. It is missed train. I don't care about missed winners because I know that I will miss losers more. This was invalidated. The new C point. Nothing. Okay, let's go here. Here it is. Wonderful situation. What I'm talking about. You see, the reaction was here, and after that it went straight to the stop loss. So this is a missed loser. We just missed a loser. Woohoo! A winner here, obviously. We're already past 3 years. 14 years left. Okay, invalidated C point. Yes, invalidated C. I wouldn't trade this even if it is a winner. And that wasn't. Invalidated C point. It went lower. Okay, here is that situation. Let me draw it. The reaction started a bit earlier than 90%, so this means that I am in this trade. And here we had the reaction touching 382 and even 50%. This was a winner. Didn't trigger. Okay, missed train, I suppose. Yes, the reaction started earlier. Okay, let me measure this. The consolidation, we do not violate C. You see that? We do not violate C. Where is that first point that triggers at least 90%? No. So it triggers the whole trade. This was a winner. 382 is hit, means it was a winner. When 382 is hit, I usually close half of my position and break even the rest, the second half, to see if it can reach 61A and further. Okay, hit 90 but didn't hit the first target. So then hit entry and hit the first target. This was a winner, obviously. hit 90%. Okay, let's go here. What do we have? 90%, hit the entry, boom, let's say 82.950, 82.950. So this was the stop hunters, a loser. Another spike stop hunters, a loser. One more. Let me zoom it in to study this trade. 90%, no, purely loser, a pure loser. Didn't trigger. The D point completion never completed. So many patterns that didn't trigger, so it proves me that it is very silly. 382 winner. That it is very silly to trade the completion pattern from C to D. Sometimes people trade that. A winner, obviously. Okay, going next. 13 years left. Obvious winner. Going next. The tea is good. So this is amazing speed of backtesting. This is the revolution in that that I did creating my pattern search pro software. Okay, the first one to hit entry was this, then we hit 382, it was a winner. Going next. Didn't trigger. Okay, let me see if it hit the entry. No, it was a missed train. I overslept and missed the train. Do you know that poem? Okay, so we went here first, didn't trigger, then we reacted to the upside, hitting the first target, and this means that it is a missed trade, missed opportunity. Stay away from this. Didn't trigger. Oh, large, didn't trigger this one. Come on. Okay, no, it was triggered and hit the target. Okay, going next. C point invalidated, so I stay away, even if it was a winner. I stay away. You never know if it will be a winner or a loser until it actually wins or loses. Didn't trigger. The second one should be examined. Okay, the first reaction started much lower than 90%, and the second reaction started when we had our orders triggered, so it was a winner. Because if the first reaction that didn't trigger starts more than 90%, then I stay away. I do not enter at the second test. So what is this trade? First reaction starts above 90, and then we have a stop loss. Yes, a loser. Going next. Didn't trigger. Neither of entries hit. Okay, what is this? Invalidated C point. Okay. Going next, invalidated C. Invalidated, didn't trigger. A winner. Obviously a winner. 382 is hit. What is this small? The small one is obvious loser. Okay, so far we had 25 trades. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 out of 25. Let's go next. I just finished the first line in my paper. Loser of 25 trades. Okay, do we violate C? No. A winner. Okay, so this is a missed train. I'll show you why. We first hit 90% and then we hit first target. So stay away from this trade. Didn't enter. Didn't trigger, didn't trigger. Going next. 11 years left. Nothing here. It was a stop loss. Yes. Negative. Okay, another stop loss. Negative. Going next. 10 years left. 7 years of backtesting was done in front of your eyes. But then, I don't know, 30 minutes. Okay, the C point wasn't invalidated. Boom and boom. It wasn't. And then we had a reaction, didn't touch the stop loss, it was a winner. Let's go next. Didn't trigger. The C point invalidated before it went to D point. Okay, potential loser. Let's examine the trade. Let's stretch the fibs from this to this and actually to this. We had a small reaction to the upside in this green candle, but we didn't touch the take profit level of 382, so didn't win but lose. Didn't trigger. What is it? A loser. Oh, I have 2 losers in a row. 2 losers, 1 winner, 2 losers, 1 winner. But before that I had 10 winners in a row. You never know. The order of how they appear. 3 losers in a row. This is the largest sequence in today's backtesting. The first didn't trigger, the second was a loser. Okay, didn't trigger. Going next. Did we have reaction started from 90%? No. So we have the reaction started after 90, after the completion. Boom, winner. Going next here. Boom, another winner. Back-to-back ciphers. Winner after winner. 2 winners in a row. You see, the reaction started, the trade already played, so I do not enter here at the completion. Limit orders should be deleted because the trade already played. Above stop loss, didn't hit, a winner. Going next. 2009, 8 years left. 8 years till present day. Okay, it was a loser. After 3 winners in a row, we now have a loser. Didn't trigger. Obvious winner. Going next. Rules for invalidating the pattern. Then rules for completion, the CD leg. Okay. Oh, you see that? This was a winner. 382 winning pattern. Adjusting the targets and not using the percentage money management. These are the 4 mistakes that aren't paid attention. People only pay attention to the correct rules, and then they go to trade this patterns and they lose, and they say, oh, patterns are not valid. This was a loser. Patterns are not good for trading. Jason Stapleton is lying. Alexander Nikitin is lying. Akil Stokes is lying. They don't trade. They only can talk, blah 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 blah. Okay, direction was a bit higher than 90%, so I should enter this, and it was a stop loss. They only want our money. They only want our money for teaching, for selling trading courses. The strategy is not working. The strategy is only a tool. But how you will use that tool? Will you master it to perfection to use it? Will you eliminate those mistakes? Another loser. Will you become a great warrior? The strategy is only a tool. It is a sword. If you are a warrior, then the strategy is a sword. Let's say you have the sharpest sword, 90%, and then the reaction was done. So stay away from this. Okay, let me measure that. 75, 54, 7, 54, 6. Didn't trigger. Okay, again here the reaction is a bit higher, so didn't trigger, didn't enter these winners. Filtered. I have just filtered those winners. Okay, a winner. Let me see what we have here. It was triggered and then it went to 382. A winner. Let's go next. It was triggered here with that spike, and then it went here to hit the first target. A winner. The second cipher didn't trigger, invalidated C point. Okay, and this first is a bit messy. Happens sometimes. Invalidated C point here. Let's go next. We have 6 years left. Okay, see, look here. We have it triggered here, and then it hit the targets. You see the 90% completion, and after that it triggered targets. So stay away from this. Second didn't trigger. This one didn't trigger. Stay away from all of them. Nothing was triggered. Okay, zoom it in. Examine this trade. Go with here. Okay. We had the reaction to the upside, but not enough to hit the 382 target, so overall it was a loser. Loser. Trade management. How you trade those patterns. This is what important. How you trade them. What is your money management? What are your rules for invalidating the pattern? What are your rules for target adjustment, for stops adjustment? This was a loser. Okay, boom. Didn't trigger. Going next. Many software out there on the internet shows only the patterns that completed. Didn't trigger because the D point is not what actually predicted. It is not what actually projected. It is what history shows. Well, it is very simple to have only winners if you pick up only those winners that the history shows to be a winner. You should project it as if you don't know what will happen. A loser. 3 losers in a row. Again. Didn't trigger. Didn't trigger. Hey, come on, come on, come on. 5 years left. Didn't trigger. Okay, let me examine this. Bear Cipher. 90% hit, and then we went to targets, so this one stay away. Didn't have a stop loss, because after that you saw it skyrocket to the stop level. Okay, come on, didn't trigger, didn't trigger, didn't trigger. 5 years left. Obvious winner. Yes. Okay, another 25 is done. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 of them were winners. Slightly below 50. 25%. Slightly below 50. Okay, a loser. Okay, one more loser. Let's go next. One more loser. Amazing. You have losers and winners. You have winners and losers. So when I have losers, I treat them as my investment. Didn't trigger. As my investment. I know that to generate some money, I am to spend some money. So this was obvious loser. 4 in a row. 4 losers in a row. When you do the back testing, you will have both winners and losers. So let's say you have 60%, so this means you have 60 winners and 40 losers. What else does this mean? This means that your strategy has both. Triggered without me, missed train. Okay, didn't trigger. And it also means that without losers, you won't have winners. Without 40 losers, you won't have those 60 winners. It is very important. Okay, didn't trigger. Didn't trigger. Obvious winner. And it reacted here from this spike. Okay. Losing streak was interrupted. And the winning streak started. Boom, a winner. Okay, going next. What was it here? Trigger. We had a bit of reaction but didn't touch the 382, so it was a loser. Didn't trigger here. 4 years left. We had the reaction started from 90%, so stay away from this. Didn't trigger here. Nothing. Okay, what we have here? 90%. Have the reaction but actually didn't hit the 382, so it was a loser. Let me type it in. Nothing. Didn't trigger. Well guys, I can imagine that you are bored already. You feel boring, a winner. Simply watching this process of backtesting, and you can imagine how boring is actually to do backtesting. When you backtest this pair, then you backtest the next pair, you see the reaction, boom, adjusted targets, and it is a winner. Instead of loser, it is a winner. How boring it is to backtest, backtest, backtest. Okay, the reaction started from our entry. It is a winner. then we have it here hitting the 90%, and then we spike it to the first target, stay away from bullish trade, didn't trigger bearish as well, didn't trigger. Yes, it is boring, and it is boring to trade them. Next, no emotions, nothing. The pattern draws, the software draws the pattern, you only set the targets, and then you manage your trades according, didn't trigger. According to the rules, closing half, adjusting targets, move stop to break even, delete your limit orders when the pattern is invalidated, or when 90% is hit and it hit the targets. So just managing your trades. Without those trade managements, you will very unlikely have that 60%. Okay, negative here. Going next. 2 years left. Sorry. Hit the entry, then went to the upside, a winner. Just in front of your eyes, you can see all the patterns that appeared since 2000, the year 2000 to 2017. Okay, a loser. You can play and pause this video, and because it is a bit boring, it is a bit large. Okay, but I am to show this. The reaction started from 90 and hit that entry, so I stay away from this. The second one didn't trigger. Going next as stop loss. The next one was a stop loss. Nothing here. Nothing here. Aussie yen 1 hour cipher patterns. Large cipher patterns. Not all cipher patterns, but only large cipher patterns. A winner. What are those large cipher patterns? They are missed trend here and stop loss here. A loser. Using the 1253 zigzag algorithm, this means large. Okay, didn't trigger. Invalidated. The C point was invalidated. 1 year left, September. Not 1 year, half. 6 months. Not 6 months, 2 months. December. Already have December. Come on. Hey, come on. Don't stop it. A winner. Oh, I remember I took that winner recently. Aussie yen. Okay, that's it. So far we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 19 plus 50. This means total 69 trades, large ciphers, 69. We had 19 winners, we had 12 winners, this means 31. Then we had 2, 3, 4, 5, 6, 7, 8. 38 winners among 69 trades. 38 winners. 38 divided 69. So the total accuracy here is 55% on this particular pair. 55%. Okay, not bad, not bad. It could be worse. Ciphers on Aussie yen, 55%. Large ciphers. You can also do what? You can do medium ciphers and you can do small ciphers. So if you have 69 of large ciphers, you will most likely have about 150 medium ciphers, and you will have about 300 of small ciphers, and only after this you will calculate the total cipher accuracy. Either it is large, medium or small. On 1 hour OZN it gives you this accuracy. Okay, but large patterns gives 55. This is the result, 55.09%, 09. Okay guys, hope you liked this video, hope you found out something new, hope you will eliminate your mistakes from your trading and stay profitable. Until then, good luck, good trading. Oh, don't forget to visit my website. Here it is, www.ps-software.net. So you can read psychology section, you can read about me, you can read about my software, you can read about the patterns. It is all free. The information is free. Well, you'll find it useful. Until then, good luck, good trading, hope to see you soon.